How to invest like Ray Dalio. Ray Dalio, the founder of Bridgewater Associates, the largest hedge fund in the world, is a multi-billionaire investor. About $150 billion is under Bridgewater's management. Dalio, in his mid-70s, has a fortune of $20 billion. In terms of wealth, he is the 36th richest American, ahead of the heir of Walmart, Lucas Walton, and fellow hedge fund manager Carl Icahn. We can all agree that everyone wants to be as successful as Ray. Grab your cup of tea because in today's video, we will discover the secrets of successful investor Ray Dalio. Investment philosophy. Dallio is a macroeconomic investor, which means he analyzes broad economic trends for profit and danger. Contrast this with the micro-investor who emphasizes studying a single firm from a technical standpoint. Bridgewater became well admired in the 2000s thanks to Dallio's macro view. Dallio, an average economics student, recognized impending disaster years before the market crash of 2008. He made prudent changes to Bridgewater portfolios in anticipation of a downturn, and they paid well. Bridgewater's Pure Alpha Fund increased in value in 2008, whereas the average hedge fund declined by 19%. Dallio is wary of inflation because of its destructive effect on purchasing power and investment returns. For this reason, he has always advocated for people to have access to gold as a form of hard currency. The all-weather portfolio, one of Dallio's most successful investment strategies, allocates 7.5% of its assets to gold. Dallio's specialty is allocating funds to hold up well during economic downturns, and his signature allocation for doing so is the all-weather portfolio. Besides investing in gold, Bridgewater also owns shares in gold mining and production companies. Bridgewater has allocated 2.15% of its portfolio to the Gold Exchange Traded Fund SPDR Gold Shares. Regarding investing, Dalio is a firm believer in spreading the risk. To lower your risk-to-return ratio, he suggests spreading your investments among 15 or more assets that are unrelated to each other. In an uncorrelated portfolio, asset prices don't go up and down in lockstep. Gold, for instance, has a low connection to the S&P 500, so a drop in the S&P 500 wouldn't significantly affect gold prices on the spot market. A Bridgewater portfolio's assets, industries, and currencies all work together to ensure stability. Dalio has also become clear about his use of cryptocurrency in his portfolio. Bias is a leading cause of financial losses for investors. Many traders take a bullish or negative stance on the market or a particular position. If an investor has a directional bias, they may be tempted to ride out losing positions for too long. It is indeed impossible for a human being to eliminate prejudice. What you can do is examine your investment process regularly. Think through the opposing scenario after you've identified the direction your thoughts are heading in. In case your directional convictions about an asset class, sector, stock, or the overall market turn out to be erroneous, Dalio says that you should diversify. If you're enjoying this video, please hit the like button and subscribe to our channel if you haven't yet to show your support. Now let's continue. What kind of investments should we avoid, according to Ray Dalio? Dalio's decision to forego some investments is based on the state of the economy. According to him, the assets and liabilities that you most want to have and the ones you would most prefer to avoid fluctuate with the paradigms that exist at the time. According to Dalio, the current paradigm results in negative inflation-adjusted returns for money and bonds. It has been established that Dalio worries about inflation in the United States, Europe, and Japan, and holds a cash position. There are three primary causes that, in his opinion, portend disaster for these economies: overspending relative to income, social and political upheaval, and China's emerging prominence on the global stage. With these considerations in mind, he suggests keeping less cash on hand, not just in dollars but also in euros and yen. Most investors, though, will still want access to capital, even if cash yields zero or negative interest. It is useful to have it on hand in a financial emergency. Dalio also suggests limiting bond exposure for these similar reasons. These individuals advocated minimal exposures to the dollar, euro, and yen currency and debt assets in a January 2022 LinkedIn post. Dalio's macro approach is complex. He's outspoken about inflation and the economy and can explain his thoughts. How the economic machine works is Dalio's 30-minute introduction to the economy. He posts about the economy and investment theory on LinkedIn. Well, that's all for today's video. Tell us in the comment section how this one was. I hope that you found this video interesting. If you want to see more videos like this, please consider subscribing for more. And please don't forget to give comments and provide us with your valuable feedback. We'll see you in the next video with some more interesting facts and stories. And until then, stay tuned.